It's wonderful to be here to be speaking to Lamin Manjang, Chief Executive Officer of Standard Chartered in East Africa. Lamin is a great friend and a very, I would call him, perspicacious commentator. Lamin, thank you for making the time today.
Thank you very much, Ali Khan.
Pleasure.
Thanks for being on the show.
Thank you for coming on.
Yeah.
Lamin, can I just start, because I have to give you credit, you were after all the first person to forecast the victory of Donald Trump at the polls that I know of, and would have made me a millionaire if I'd backed that with the forecast of yours with money. Tell us about the big picture right now, how you read it. You know, Stan Chart has a huge footprint. You have a big appetite to analyze the world. What's happening? How do you read the tariff war? How do you read the big macro trends as we find them in 2018?
All right, thank you very much, Ali Khan. I think in terms of the macro picture, I think global growth really seems to have rebounded. We've seen the numbers from China, from Asia, from Africa. I think the IMF is forecasting about 3.3% growth globally. So I think from that trend, we've seen positive momentum coming back, coming out of the challenges that we had in 2016, 2017. From a political point of view, obviously the U.S. continues to be a concern. Some of the threatening noises that are coming out in terms of geopolitical conflicts with North Korea, although that seems now to be on the mend in terms of the proposed talks. The salvo on trade wars initially got the market very jittery because there was no clear sight in terms of what exactly that trade war would mean. Of course, it's now been narrowed down substantially. So we've seen the allies being sort of exempted from the steel tariffs, but then China being singled out. And the Chinese obviously retaliating in like fashion. So we don't know how that will play out. Obviously, the first shots have been fired. There's still a bit of time. We hope that, we will have some common sense prevail in terms of making sure that this does not jeopardize global trade.
Because actually, Lamin, I did an interview with your head of transaction banking a few weeks ago, and he said to me, Ali Khan, the last time we looked at a fully blown trade war was in the 1930s.
Yes.
And he said to me that when that really blew up, the amount of global GDP slowdown was actually huge.
Massive.
1/3. Or it was, so, yeah. I mean, is there a cliff edge effect? Could the cliff edge be as bad as that?
My sense is that there has been a threat made by the U.S. I don't think they will really go all the way. My sense is that there will have to be at some point a pulling back. We might have some tactical measures. But in terms of a full-blown trade war between China and the U.S., the ramifications of that for the biggest economy and the second biggest economy going at each other is really going to be so devastating that I don't think we'll go down that road.
Lamin, if I can come to this whole One Belt, One Road Chinese initiative, which of course we are on the periphery. I'm from Mombasa. The railway is considered part of that whole program. And I saw a report recently in Bloomberg which said that Standard Chartered is the most aligned bank to OBOR because it is in, I think they counted about 60 countries, and I don't remember the exact number, but you're about 44. Yeah. So it's talking about strong alignment. What do you see as that? What do you see that alignment doing? How are you seeing that feed into the business? Mm-hmm. We were at a function where you brought Jack Ma here, Alibaba. There seemed to be a lot of alignment. But can you tell us a little bit about big picture and then what's happening here?
Obviously, the One Belt, One Road initiative is one of the biggest investments that China is making in order to just open up that whole corridor. And as you said, Standard Chartered is perhaps the only international bank that is uniquely placed in terms of that, that corridor. Very, very strong presence in China, in Asia, of course, in the Middle East and in Africa. And therefore, I think we've taken a lead in terms of supporting that initiative. A number of our clients who obviously would want to be a part of the investment in that One Belt, One Road initiative are talking to us, and we're seeing how we can support them in terms of whether it's the infrastructure projects, whether it's the trade finance capabilities that that they would need to be able to finance those initiatives.
And really, if you look at the skill set of Standard Chartered, you've been known as an EM, emerging market commodity trading house. This probably fits very well for you.
It is very much in line with our, our historical ties, with the region, the product capabilities that we have, the strengths that we have as a trade bank, and of course, in terms of, financing infrastructure projects across the region.
I want to jump to something which might be a slight curveball, but I saw that StanChart made a substantial investment in a cryptocurrency called Ripple. Do you want to tell us about that? Because there's so much confusion about the crypto world and what's happening, and how did you see that? And if you can contextualize that.
Yeah, the company in question is called Ripple, and Standard Chartered Bank decided to invest in it. It's a company that is looking at distributed ledger technology, blockchain. And of course, blockchain has a number of potential benefits for banks, especially when it comes to supply chain financing, trade financing, etc. And we felt that it was important to, have a seat at the table, be able to, participate in some of these emerging technologies. So, hence our investment in Ripple. And I think it's really given us a huge insight into, what that opportunity is and how we can leverage on it.
It's obviously created a lot of excitement. There have been reports, for example, here in Kenya, that as a percentage of GDP, Kenya is 5th or 6th biggest investor in Bitcoin, if you look at it as on that basis. How do you view cryptocurrency? Is this something the bank's embracing? What do you think of it?
I think we have to distinguish between the distributed ledger technology, the blockchain, and then the cryptocurrency, which is built on top of that. I think on the blockchain technology itself, definitely there are a lot of benefits for banks, and we've invested in that, and we'll continue to leverage on that. The bit about cryptocurrency obviously worries me, because we've seen how, in the last few months, there has been so much volatility with Bitcoin. And really, when you see that kind of frenzy, that kind of volatility, it is a source of concern. So I think a number of regulators have expressed reservations about Bitcoin, about people to be very, very cautious when it comes to investing in Bitcoin. But it's the old adage about greed. When people see those kind of returns,
which are
unprecedented, so there is that feeding frenzy. Everybody wants to get into it, but I would be very cautious about Bitcoin.
Can I now come to Africa? You of course are from West Africa, you're based in East Africa. Last year, I believe, was the first year for 20 years that we had negative per capita GDP growth because of population expansion. We've had this dip. We seem to be coming out of it a little bit. What's your perspective on the continent, Lamin? Are we back to better growth? Are we more, are the foundations more stable? And how do you look at it?
Well, Africa is a continent with different, patterns. Yes. Obviously, we have seen overall growth is recovering, so which is good. But then, on the political front, we've seen, progress in some markets. Yes. When we see peaceful change, peaceful transfer of power.
Well, you were the outlier in the Gambia.
Gambia started the ball rolling with the peaceful elections that were held, and of course we managed to get a transition, although it had to be through threat of force for that to happen. But more recently, when we saw Botswana having handing over of power.
But they're an outlier.
18 months.
They're an outlier.
But it's
guys.
still, it's
Yes,
a positive story. It's a positive
What
story.
about these other handovers down south, like Angola,
Well,
Zimbabwe?
exactly. Angola, Zimbabwe, South Africa. Again, we've seen transitions happening. So I think my sense is that overall the direction is positive. Of course, we still have problem areas like Somalia, in South Sudan, in DRC, where we still have challenges. But overall, I think the trend is more towards democratization, peaceful elections, and transitioning to new leadership.
So you think we're in a moment of change, but
there is definitely a wind of change.
But it's not going to happen in a uniform manner.
It won't happen. So, like I said, you've got progress on one side, you've got slow down, moving backwards in some areas.
Coming to East Africa, and I'll take you back to a presentation you made at the beginning of the year when we were at the economic release with Razia Khan, and you were very optimistic. And I remember sitting next to your boss, actually, and saying, he's very optimistic. He said, I wish you told me. So I apologize for that. But it was, how do you look at Kenya now? I mean, last year was a tough year. You put out a profits warning. But how are you looking at the region in Kenya today?
I think the region generally is recovering. Obviously, 2017 was a very difficult year for Kenya in particular, with the impact of the rate cap, the prolonged elections, the drought. So really, GDP slowed down to below 5%, which for Kenya really was not a good picture. However, I think the outlook for 2018 is already looking very positive, anywhere between 5 to 5.5% of GDP growth this year. I think the political temperature has gone down, obviously, with the positive moves made by the principal players. So when I talk to my clients, really what I sense is that people are back in terms of wanting to invest, wanting to grow, wanting to take advantage of the regional economic bloc. Of course, recently when we had the Kigali Agreement, the Africa Continental Free Trade Area.
What do you think of that?
I think it's a very, very positive move.
Yes.
Clearly, it makes sense for Africa to really come together as an economic bloc.
But so two big countries not want to come in.
Of course, there are political issues that need to be resolved back in those two countries. But I think overall, my sense is that the countries will have to come on board.
Do you see a situation in our lifetime where we have a free trade bloc across the continent?
I'm optimistic.
Yes.
I think it will happen.
Yes.
Obviously, it's not going to be easy. You can't get everybody on board at the same time. But it took the Europeans, decades to actually get to where they are. I don't think we'll have to wait decades.
Yes.
We decided to take a very bold move to say, look, it makes sense to have free trade, to encourage intra-Africa trade. It's perhaps one of the lowest globally. If you look at, trade within Europe, trade within Asia,
yes,
trade within Latin America, we are way behind. So I think this is a very positive first step. And I think with the leadership that we have, the likes of Kagame driving this.
But he's a free trade evangelist.
Exactly.
He's
already been walking the talk.
Yes.
So
and in fact, it makes sense for him to walk back to.
Absolutely.
Yes. Yeah.
Absolutely. Yeah.
So I think it's good that we've got him there because he's very passionate.
As the chairman of the AU this
Yes.
time, I think he should definitely be spearheading this initiative.
And I'm sure you agree. When I look at our people are very entrepreneurial. You can find them everywhere doing business. We should just unleash it.
Unleash it, just remove the barriers and just allow trade to flow. Mm-hmm.
May I now come to the business?
Yeah,
I mean, last year, was quite a tough year. I think you issued a profits warning.
Yeah.
Then you came inside the profits warning trigger, which is 25%. So well done on that. Tell us, how do you contextualize how that was last year, and what do you think is going to change this year?
Well, last year, obviously, the banking industry came under a lot of stress, primarily because of the impact of the interest rate cap, which effectively squeezed margins in the industry. Of course, with the elections as well, there was a lot of uncertainty. So, businesses held back a bit in terms of investment decisions. So within that context, Standard Chartered Bank delivered, there was a modest, growth in terms of, income. Very modest growth in terms of assets, just about 3%. Very substantial growth in deposits, so liabilities grew. But then the biggest challenge that we faced last year was on our NPLs.
Yes.
So our loan impairment actually grew by 90%. Now, this wasn't really because of a widespread problem we had with the portfolio. It was a very select, few specific clients, but still the magnitude was massive, and therefore our operating profit for the year dropped by 24% year on year. But then these are some of the challenges that I think many other banks faced in the industry, and of course the fact that because of the rate cap, we had to deploy some of the surplus liquidity that we had in government treasury bills.
I think you're holding more than $1 billion.
Exactly, and
Yes.
the income on that actually went up 13%.
Oh, wow.
So I mean, if you look at it in an overall context, what we would like to see is more lending to the real sectors of the economy, direct lending, where we can actually help to spur investment, consumption, etc. But under the circumstances, I think most banks ended up putting more money into treasury bills and bonds as opposed to lending to the real sector.
Let me just touch on that. So, I mean, is the government borrowing appetite also going to, what happens to that in the dynamics of a modification of the rate cap? Hasn't it been a sweet spot for the government because they've had the banks having to flock into their securities, or, how do you see that playing out?
Well, in a short run, yes. I mean, government was able to borrow more at a cheaper rate, but of course, you do not want this what we call a crowding out effect, where government borrowing is actually crowding out the private
Because
sector.
private sector credit growth is
That
still
slowed
anemic,
down.
right?
That was very anemic. I mean, at one point it was even below 2%. So definitely, government did benefit from having those inflows of funds. But I think in the long run, really, what we are looking forward to is consolidation, fiscal consolidation. Government really, tightening its belt in terms of
Are
spending.
you expecting that to happen? Because every time I open my computer, I see a report, Brookings Institute, IMF, World Bank, everyone talking about increased debt load, not only in Kenya, but across the board in Africa. Is it, if we look at Kenya specifically, the Big Four agenda, is this the moment the government has got to be a lot more innovative around its balance sheet? It's got to draw in private. How do you think, or is there headroom left?
I mean, obviously, the debt to GDP ratio is still, there's still room. If you look at Kenya's debt to GDP vis-a-vis other countries, there's still room.
How much room is there?
It's about 56%.
Where is it? Where does it get to before you start worrying as
I think once it starts getting towards the 70% levels,
yes.
Obviously, then you start getting concerned. So there's still room. But I think in terms of the Big Four agenda, obviously the amounts involved are massive, and I don't think government has the resources to be able to do that by themselves, and they've acknowledged that. So there's a need for public-private partnerships to really make sure that the initiatives on housing, the initiatives on the manufacturing sector, obviously on food and health, that you've got a very active participation of the private sector. So incidentally, I was invited to a meeting a week ago on the Kenya Mortgage Refinance Company, the proposed setting up of the KMRC,
yes.
that would then help to spur the initiative on building 500,000
But
housing
it seemed
units.
the World Bank was supporting it quite substantially.
Yeah.
Are you
Indeed.
going to be, as a bank, involved with that?
We are studying it very carefully.
Because you're big in the mortgage market.
We're quite big. We're quite big. So the idea is to have banks, SACCOs, DFIs, and the government, obviously, to come in as shareholders in this new entity that will then help to spur the mortgage market.
So, and given that you've played such a big position in terms of financing the government itself, are you seeing opportunities here for the bank? Not only in the Kenya KMRC, but in other areas, housing, for example. Yeah. Is low-cost housing going to attract you in?
I think, obviously, we'll study the entire proposition. We might not be able to participate directly in all of the areas, but this will be a value chain. So if you want to spur low-cost housing, for instance, do we have the capability to have some of those materials manufactured locally? Because you've got to have a capacity to manufacture some of those building materials. So these are areas where, as Standard Chartered Bank, we can look at the entire value chain and say, okay, this is the area where we want to participate. Incidentally, I was very, very impressed with the role of the SACCOs during that discussion about the KMRC.
Yes.
Because one of the things that was not captured, in the data is when we talk about 24,000 or 28,000 mortgages in Kenya, we're just looking at the ones that the banks finance. However, the SACCOs were able to prove that, in fact, they are indirectly financing a lot more mortgages.
Are they?
But because they are not captured as traditional mortgages, so they get left, left out of the of the calculation. So, I was impressed by the fact that, when somebody wants to buy a house, typically what they would do is to borrow money to buy a piece of land. And then, that's a personal loan. And then they will pay that off. And then they borrow another amount of money to start building the house. And then pay that off. And then they borrow another amount of money to finish the house. So the house is not really pledged as collateral in the traditional sense of a mortgage. But effectively, the SACCOs are helping people to acquire houses. And low-cost houses in this case. So they were very excited by the opportunity, and I think there's space for everybody now to come in and see how we can play in terms of supporting the government's initiative.
Because that's been a very vibrant sector, the SACCO space.
Indeed. I was told it's perhaps one of the biggest in Africa, the SACCO sector in Kenya.
It's been quite incredible.
Yeah.
Lamin, obviously the rate cap affected last year. There's been a lot of talk of its substantial modification or complete repeal. How do we stand with that? And, is there a time? Do we need to, how do you see it playing out?
Well, obviously, I think the rate cap has been adverse in terms of its impact on both the banking sector as well as the overall economy. So, like I said, credit growth that was already slowed down, went even further, slowed down even further, in 2017. And of course, the perverse nature of, banks not lending to the real sector, but, lending to government instead. All of these obviously were consequences that really, nobody wants to see. The cost-cutting measures that we are taking, layoff of staff, closure of branches, all of these have an adverse impact on the overall economy. So our view is that given the fact that the rate cap hasn't achieved its desired objective, which is really to have lower credit being accessible to as many borrowers as possible, all it led to is only a select few of borrowers who meet that risk appetite or risk threshold who are getting access to credit, and the rest are actually being left out. And those that are left out then have to resort to other means of borrowing, and that is even more expensive. So, that's the perverse nature of the reaction. So rather than helping those people, you've actually pushed them into more expensive sources of borrowing. So our view as an association, as the Bankers Association, is that if this thing hasn't worked, then it's time to actually just change it, repeal it. Now, we are mindful of the fact that, the pressure on the banks, to lower interest rates is real. And banks would have to respond in a very responsible manner to make sure that, we are offering credit to clients in a way that is market-driven, yes, but of course doesn't lead to the kind of reactions that we saw before the rate cap came into being. So we are advocating for measures that will ensure that we have a level playing field, very strong consumer protection guidelines and framework in place, full transparency in terms of pricing and how banks determine interest rates, and all of the other measures that we talked about in terms of sustainably bringing interest rates down over a period of time. Now, if that is done, I think the long-term benefits really would outweigh any of the sort of challenges that we saw in the past. Let's remember that 3 years ago, private sector credit growth in Kenya was over 20%.
Yeah, it's
now
a
that
huge,
is substantial.
It's a huge hit.
Yeah,
isn't
that definitely helps to support economic growth. It slowed down to 2%. Now that cannot be in anybody's interest. So I think we would definitely want to see a situation where banks are back into lending to the real sector, supporting economic growth, and of course doing it in a responsible manner.
Is GDP growth a silver bullet for Africa in the sense that without it we're not going anywhere?
Well, definitely you need GDP growth, but in itself, obviously, it's not enough.
Yes.
Somebody says, you can't eat GDP.
Which has become a refrain all over the world.
Yes, exactly. So there's issue of, making sure that there's equity, there's justice, that people, do have a fair share of the national cake. So those are all, issues that need to be looked at. But yes, overall, you do need macroeconomic stability. So you do need to have, robust GDP growth, inflation that is low and in single digits, relatively stable currency, interest rates that are, market-driven, but, allow, people to access credit and grow their businesses and invest as individuals.
I got 2 more questions.
Yes.
We live in a new 21st century. I keep reading reports that data gatherers are going to be the new banks. You look at Facebook, the amount of data points that guy has on people. Is there a threat to a Standard Chartered that's coming out of that area? Or do you think you're able to manage this emergence of this sort of fintech world?
Absolutely. I think the fintechs are clearly an area that banks have to watch out for. We see fintechs nibbling at different areas of our value proposition, especially on the payment space, on the lending space. So it is definitely something to be concerned about. The last time we met, I think I quoted Andy Grove's famous statement, "Only the paranoid survive," the title of his book. And the essence of that book really was talking about strategic inflection points.
Yes.
And the fact that industries, companies have to be absolutely mindful that they do not miss out when those strategic inflection points are taking place. So banking is no exception. I think we are at a strategic inflection point for banking, because obviously the confluence of the fintechs, the telcos. Take Kenya as a very specific example. The mobile payment space, where Safaricom came in with M-Pesa. That's taking a substantial chunk of business that otherwise would have been flowing through the banking system, now flowing through the telco networks. So we do have those opportunities. They shouldn't just be seen as threats. There are also opportunities. And increasingly what we are seeing is partnerships between banks and fintechs. So for instance, when we invested in Ripple, in terms of the blockchain technology, that's one way of banks making sure that, we are ahead of the curve in terms of, partnering with the companies that are in those spaces. Standard Chartered has an outfit in Silicon Valley. We call it SC Studios,
yes,
which is also
what is it, a VC or
it's an outfit that we have there where we can tap into some of the trends and some of the developments that are taking place in Silicon Valley, which might have an impact on us as a bank, so that we are ahead of the curve in terms of those strategic inflection points.
I love that phrase. So I'm going to ask you another. Is there a difference to being in your seat at this moment that you're describing of a strategic inflection point, and how do you optimize this 6 floors of human capital that you have here, spread out all over the world? Is there a different way of managing, or are you coming, how do you handle this very fast-moving strategic inflection point situation?
I think it's in fact one of the biggest issues that we debated very recently, in terms of how are we positioning the bank. Obviously, we've done a lot in terms of especially investment in the digital space. We realize that the digital space offers enormous opportunities.
You've also got this product, right, where you can communicate via video with
We've
yes.
launched video banking and chat banking. We've invested in cash deposit machines. We've invested in the mobile banking app. We are looking at other areas where potentially we can leverage our investment. In fact, just a month ago, the bank launched a fully digital retail bank.
This is the one in West
Ivory
Africa.
Coast, yes, in Ivory Coast. So an end-to-end digital proposition. Basically, we do not have a retail presence in Ivory Coast. We only have a corporate bank there, and we decided that okay, let's come with a retail proposition, but make it fully digital, end-to-end.
And how is it? How is it doing?
Well, it's just been launched, it's now on the takeoff phase. But that same model now will be migrated to all the other markets, the big markets. So Kenya will be having that proposition.
So there are people who could bank with you and never
without
actually
necessarily having to visit a branch.
Yes,
you can open your account, make your transactions, do everything on the digital platform. So these are exciting times. I mean, leading the bank at this point in time is actually very, very exciting. The changes that are happening. The customers who are very, very astute. Obviously, they are global now. They know what's happening in the rest of the global economy, and they just want the same kind of service and standards that they get anywhere else in the world. So I think we are well positioned, but we just want to make sure that we do not get caught off guard with any of these strategic inflection points, like I said, that are happening.
And finally, yesterday I saw there was a big push where Standard Chartered Bank is identifying outlier female entrepreneurs. Was what I took away from it. You were attending. I think you were part of the selection committee.
Sure, yeah.
Do you want to tell us a little bit about what you've been doing, why you've been doing that? And
sure. Well, it's called the Women in Technology Incubator Program. So if you look at it, it's targeting women. It's targeting women that are in the tech space, women that are trying to make a difference, and how can Standard Chartered Bank identify these women and help to support their business growth. So we partnered with Strathmore University, their iLab, which is an incubator. We had over 180 applicants for the program. Obviously, it was a massive response. We sort of narrowed it down to 40, and then further narrowed that down to 10. And so a couple of days ago, we had the final, sort of presentation of the ideas. And out of that, we gave it, awards to the top 5. But very exciting. I mean, when I went there and I listened to some of the
I saw you really immersed. There was a photograph. It was as if you were...
Amazing. It's amazing. It's amazing. And the good thing is that a lot of these women, of course, before they came into the incubator program, they had a very fuzzy idea about, their business model and, what do they really want to achieve. So I think the beauty about the incubator is that it sharpened their ideas, give it more focus. Now they have a value proposition. They know who their target market is. They know what they need to do to grow the business. And basically, what the bank is doing is supporting that initiative in a way that would then allow these businesses, these women entrepreneurs, to actually then grow their businesses, create employment. And very much in line with the SDGs, the Sustainable Development Goals, where Standard Chartered Bank is very much committed to empowering women.
No, it was a really good initiative, and I could see you were very engrossed. Lamin, I thank you for today's time.
Most welcome, Alikan.
I must confirm that on the 2nd of January, I made Standard Chartered Kenya my must-have conviction trade.
Okay.
So just to tell everybody, the share price has rallied 12%. Lamin's about to pay you a dividend, which is worth another 5% of returns. So, and you have now good reason, having watched this interview, why this is the destination for your hard-earned savings for sure. Lamin, always a pleasure talking to you.
Thank you very much, Alikan.
And thank you for making the time today.
Most welcome. Thank you.
Thank you.
Thank you very much.
Thank you.